So hello everyone, welcome. Thank you for joining us today in our discussion on innovation. I just wanted to thank you all for logging on and joining our presentation today. We're talking about investing in innovation, a thematic approach to long-term portfolio growth. Part of this is to introduce our innovation series. It's a series of portfolios that we put together to capitalize on thematic investing, and which is largely the purpose of our meeting today. Please take a moment to read through the required disclaimer. It's just something that we have to show you. Obviously, the main thing in these disclaimers is that investments always involve risk, and unless otherwise stated, are not guaranteed. So the title of today's presentation, Investing in Innovation. And today we're going to discuss going over what innovation means, since it is quite an overused term and an elusive investing concept. We'll then briefly review the importance of asset allocation in portfolio construction. And then we will dive into what thematic investing is and why it is important. I'll next try to dispel some myths about thematic investing for those of you who may have heard them. And finally, we're going to take a look at how all this fits into your portfolio. So what is innovation exactly? What does it mean? Innovation is the practical implementation of ideas that result in the introduction of new goods or services or improvement in offering goods or services. Innovation as a new or changed entity, creating or redistributing value, often viewed as taking place through the provision of more effective products, processes, services, technologies, business models that innovators then develop and introduce into the markets and governments and in society in general. I think the important distinction here is that innovation is not necessarily invention, though the two terms are often confused. In other words, an invention could be an innovation in a product or a certain market segment, but it's not necessarily required to have an invention to have innovation. Innovation could simply be processes or redeployment of various types of capital. Investing in innovation implies investing in changes occurring in the global economy. And what kind of changes? What do we mean by that? We're talking about market composition or market development, consumer behavior, environmental demands, physical infrastructure needs, just to name a few. So when you're investing in innovation, you're investing in these types of changes, and it's really important to understand that. But before we delve further into thematic investing, I would really like to emphasize that in no way does this imply abandoning proper asset allocation. Risk management is still our top concern. Diversification across many asset classes and sub-asset classes is still the best way to mitigate risk and improve what we call risk-adjusted returns. Most investors tend to focus on absolute return, like how well their portfolio performed over the last year. Risk-adjusted returns, on the contrary, focus on that return relative to the volatility the portfolio experienced over that time. Investing in a mix of stocks, bonds, alternatives, and other asset classes helps to moderate that volatility and improve the risk-adjusted return. How your portfolio will be allocated really depends upon your risk profile and some other things like your time horizon and other aspects of who you are as an investor. Today's topic of thematic investing looks at how we can improve your risk-adjusted return by including in your asset allocation investments focused on innovation themes. Here is a look at a comparison between a traditional moderate growth allocation and a thematic enhanced allocation. What we mean by that is introducing into the allocation a separate asset class that is focused on innovation-themed growth. The thematic enhanced allocation for a moderate growth portfolio would include somewhere between 10 and 15% of thematic-based investments. We're going to dive a little bit deeper into that next, but it's the purpose of these two tables is really show you that they more or less track one another, except for this introduction of this piece of thematic growth. So what is thematic investing? Why can it be considered a distinct asset class? Thematic investing is the rapid pace of technological advancement, the emergence of powerful demographic trends, and changing consumer habits and evolving demands and concerns around physical environment. And all of these are creating massive opportunities for disruption across the global economy. In essence, thematic investing refers to the process of identifying these powerful macro level trends and investing in the companies that stand to benefit from their materialization. Thematic investing is a forward-looking investment approach. And as you can see on the slide here, there are basically two types of approaches to portfolio construction. The first, which is probably the more familiar, is really you're looking at the past. It's backward looking. It's this idea that in investing, history repeats itself, and we're constantly looking for confirmation in the past for what's happening today. And in fact, in some sophisticated portfolio management, they look to the past for like these things called factor premia or smart beta, different things that indicate that there might be some value to be extracted based upon historical performance of certain asset classes. And also there's a concept of mean reversion, which you hear a lot of. Now, the other way to approach portfolio construction is really just to anticipate the future. What is going to happen? It's forward looking. It's the idea that no, things actually do change and evolve, and that they will be different, maybe not drastically different, but different enough that will create opportunity, and that growth-oriented investments will be available if we have this approach to investing. So the thematic investing, like I said, anticipates future structural changes, and we look for those. There's a process for identifying those. First is top down. We want to identify disruptive macro level trends, these innovation trends that are occurring in the economy. And the second step is bottom up. We want to find investments that have high exposure to those trends. And that's an important component. And so the characteristics of this portfolio construction through this process are long-term growth-focused strategies that are unconstrained by, we would say, arbitrary geographic and sector definitions, which are traditional. Those are the traditional definitions that we look for. Geographic, like US, Europe, Asia; sector, meaning large cap stocks or energy stocks or things like that. And these portfolios, these thematic based portfolios, often will demonstrate low correlation to other growth strategies like traditional large cap growth, for instance. And also these portfolios tend to have what we call relatable concepts. It's all things that you and I can see happening in our world, that we can relate to them, that they're understandable. It's not just a figment of our imagination. There's a three-step process for identifying themes and ETFs that provide exposure to the companies that are well positioned to benefit from the materialization of those themes. First, we need to have a high level of conviction. High due to the observable structural changes in demographics, technology, behavior, or politics and regulations. And I want to point out that when we say conviction, it's backed up by data. It's not just a belief, but that when we talk about change in demographics or change in technology or behavior, there's statistical data backing those up. Secondly, we want investability. Obviously, there can be changes, but if there's no way to invest in those conveniently or significantly, it's not a very good opportunity. We have to have investability. So we need a broad group of publicly traded companies with high liquidity that provide targeted exposure to that theme. And finally, it's the time frame. We're not looking at things that are happening over the next 3 to 4 months. We're looking at mega trends that we anticipate to occur over 10 or more years. So it's longer term focus, and that's really important. You can see on the table to the right, and I apologize if it's a little bit hard to read, Generally, we're looking at three categories of innovation: disruptive technology, people and demographics, and physical environment. And within those categories, we look for these mega themes. Big data, you've heard of that before, I'm sure, digital content, things like that, robotics, new consumers or new consumer patterns, things like that. And then within those mega themes, there are these main themes that those mega themes are addressing, and then on till you could boil it, get more granular into the sub themes that we're looking at. But generally, this is how these themes are identified. Here's some examples of thematic ETFs. This is a list actually we just chose one of our partners, Global X, who does a lot of research into this area and provides some ETFs. We have several partners that we work with, but this is Global X example of the types of ETFs that you have access to for these various categories in technology, people and demographics, physical infrastructure. I won't go into each of these specifically, but I just thought showing you a list would be indicative of how accessible they really are. We often hear this term of disruption or disruptor, and I know many think it has somewhat of a negative connotation, but in the world of investing, it does not. Disruption is more like a signal of change and an opportunity to invest in those changes. And I think that's an important distinction. The diffusion of innovation theory and innovation of practice tend to follow what we call an S curve. And in terms of its adoption pattern. And you can see on the table to the right what that curve looks like and the various stages that we can break that adoption curve into. So the relationship between an adoption curve and stock prices, for instance, is not always a direct one. However, knowing where a product or technology is in its adoption can help signal general risks and characteristics of an investment. A technology, for example, in its innovator stage may resemble more of a venture capital-like risk and return profile, given high potential returns, but also high possibility of failure. A technology that is nearly ubiquitous in the late majority or laggards phase is very well established, but has a lot less upside. Weighting by forward sales growth is a way of achieving a tilt towards the earlier stage, higher growth potential themes, and we're going to talk about that in a little more detail. You can see here in this slide, sales growth gives us an indication of the strength of a market being created by innovation or disruption. This sales growth can occur within an established market. Think electric vehicles inside of the traditional car market, or it could be wholly new markets such as genomics, that is driven by science, or the cannabis market opening up because of legalization. What you see here in this table is the relative growth of those markets to the sales growth of the benchmark, or the MSCI, in the orange line of the All World Index. So that's the March 31st, 2021 year expected sales growth. So the benchmark is in orange for the All World Index versus these various categories. And you can see most of them are significantly growing faster than the general benchmark. And that gives you kind of an indication of how thematic sales growth helps us identify some of these markets. It's pretty powerful slide. Themes, as I mentioned before, experience adoption over time, and what thematic investing does is try to seek investment opportunities on this adoption curve. You can see here we've used some of Global X ETF tickers where they are, and the thing on this adoption curve, and I'll point out on the far right, on the upper right, is social media. Think Facebook, Twitter, and all these others. Everybody is got some or has some kind of exposure to social media, some app or something like that. So we're already in the late stage of social media adoption, and that is, often evident in showing up in like sales growth for Facebook and some others, where their traditional business model has already started to taper off. That's why you see some of those companies out in the market trying to acquire new companies in other areas. On the other end, you see autonomous and electric vehicles. You'd be surprised because in Southern California, where we live, it seems like every other car is a Tesla. But in fact, if you look at the US and even the global market, adoption rates are really, really low. And so we're very early on in the adoption of electric vehicles. And so there's a tremendous amount of growth to be had over the next decade or so in terms of the growth of the electric vehicle market. And so this kind of shows you where each of these thematic areas are on that adoption curve. Some example of disruptive themes, again, want to be very clear about what disruption is. We'll take it like, for instance, in energy, you see the old paradigm energy sector is largely revolves around extraction and sale of fossil fuels, whereas in the sector disruptor is lithium and battery technology. So the falling costs and rising production of lithium-ion batteries is leading a dramatic shift in renewable energy and electric vehicles. And this has a long way to go because right now, we started with lithium batteries and small products like phones and stuff like that. And then they've gradually been increasing the potential of these batteries to a point where we're getting close to grid scale storage of energy, which is going to be extremely transformational for the energy market. Another one is healthcare. Traditional healthcare just treats symptoms and ailments, right? You have a problem, you go in, they identify the system, they treat the symptoms and try to take care of it. Now, the shift now is towards health and wellness. It's basically focusing on lifespans, healthcare costs, and driving those down, and then focusing on habits and healthy living versus and preventative type of programs versus treating symptoms. And that's a huge and increasing market. This table gives you some insight into the growth of the thematic investing landscape. You can see from the powerful growth that this chart shows that the acceptance of thematic ETFs as an asset class is increasing. This is actually quarter on quarter. So end of Q1 2021 from Q4 2020, the uptake of the thematic-based investments as measured by the dollar assets in those investments is up 28%. So there is an increasing appetite for these. And this also goes somewhat along generational investing. Younger investors are much more interested in this type of investing, not only for its growth potential, but also for just their general mores, if you will, and what they want to invest in. And so this is having a powerful impact in the investing landscape and on portfolio construction. So let's talk a little bit about what thematic investing is not. Thematic investing is not just repackaging tech. And I'm sure there's a lot of people who think, oh, this is just tech bottled and packaged in a new way to sell technology. Thematic investing is actually sector agnostic. It is not constrained to a particular sector. Whether a robotics company, for example, is classified as industrial, information technology, or even healthcare is really irrelevant. What we're looking for are leaders in robotics development. As an example, the Global X Robotics and Artificial Intelligence ETF, which is one we use in a couple of our portfolios that we manage, draws holdings from 5 different sectors, and IT makes up actually less than 50% of the fund exposure. And you can see up in the upper right chart what that distribution is across the various sectors. So it's important to understand that. That's why, in part, thematic is deemed to be a unique asset class because it's theme-based, not traditional sector-based. It actually adds to the traditional sector allocation. Thematic investing encourages chasing shiny objects or following popular fads. The diffusion of innovation theories explains how new products or ideas are adopted across markets. by contrast, the hype cycle popularized by IT research firm Gartner holds that excitement around new technologies tends to precede actual adoption. You can see that in the upper right chart. Now, it's important to note that both of these theories are, in fact, theoretical, and the chart itself is purely illustrative. The actual speed, timing, and magnitude of adoption and height vary by product. So it's not equal for all things, but this is a general concept for you to understand. You know, in the hype stage, we have in the hype cycle. The hype is very early on, right? The peaks early on, and there's this, what I love, they call the trough of disillusionment, right? Oh, it's, you know, maybe not that good, or oh, maybe it's not that popular, and then it tapers off, right? Whereas the S curve of adoption is really looking at the statistical, the mathematical basis of the adoption. You can see it, you can measure it, and it creates a pattern which we can follow from an investment point of view. So the concept of chasing a shiny object implies that thematic investing is predominantly a play on the hype cycle, but it really isn't true. Thematic investing is a research-driven approach to identify powerful macro-level trends, accurately target a comprehensive list of companies that stand to benefit from the materialization of that trend, and be implemented over a long period of time. So, in fact, it is highly quantitative based and not just news cycle based. That's an important myth to dispel. Another myth: it's too late to invest in certain high growth themes. Well, as I mentioned earlier, thematic investing is a long-term approach to capturing structural disruptions or change. High or low performance in individual themes is more often noise than a signal that a theme is too early or late. So we prefer to lean on the adoption curve, including estimating the total addressable market for each theme and current levels of penetration. Proven research indicates levels of adoption for each theme using quantitative and qualitative analyses. The total addressable market and the speed of the adoption for each theme obviously is not the same. They're going to be different because each of those themes have different parameters and different issues that it's addressing. Changes in technology, consumer habits, regulations, and other factors obviously can accelerate and decelerate the adoption. Finally, thematic evaluations have risen too high. So if you're already familiar with this segment, this space, you know, that thematic investments have performed well over time. But and I apologize for this table. It's a bit difficult to see, but it illustrates first that these themes have real value. In other words, we're not pricing to eyeballs, or as in the old days in the .com. These investments, and we're looking at particular ETFs, they have real sales, right? So that means there's a real market. And we can see that the relative valuation, in other words, price to sales as an asset class, you can look down on the far right corner, that price to sales measures the actual ratio of the price sales to expected growth. So that's the price to sales growth measure. And if you look at that, even though the price to sales has risen, for instance, on average in the themes by 25%, relative to its growth, it's only risen 7%. And so the valuation or multiple expansion, you might call it, is not as aggressive as it appears if you're just looking at the pure price to sales. And that, I think that's an important a point, because most people are looking at earnings-based valuations, but in innovation themed investments, we're really looking at market share growth, how the market is evolving, and that often means reinvesting profits into the growth. So profits can be low, and a good example of that would have been Amazon. Amazon for the first 10 or 12 years showed almost no profits. It was reinvesting all its money into its infrastructure, and until now it's one of the most profitable companies and has grown significantly. So while high growth firms may care little for profitability during the early stages, like in Amazon, investors do focus on the adoption. How many people are using that new product or service or technology? That's an important component. And the sales data is really the best way for us to gauge the speed and stage of the adoption. So by looking at total sales and sales growth, we can estimate where they are on the adoption curve and understand really what is the relative valuation. I think that's an important point to understand when we look at the valuation of these thematic-based investments. So now let's take a quick look at portfolio construction. How thematic investing fit into the portfolio? So the key reasons for using thematic investments are these, as I've outlined here. They're very efficient vehicles for accessing disruptive trends. Not all thematic ETFs are the same, but a well-designed one can provide access to dozens of companies around the world, and they are non-geographic, generally speaking. They're global. You can invest in the companies that benefit from the rapid growth of that particular innovation-based theme. Obviously, ETFs save us time as investors in researching potential themes and obviously identifying those companies within those themes. They tend to be non-correlated equity exposure, meaning that they're going to not correlate with your traditional large cap growth portfolio, for instance. And that's an important point in risk management. Obviously, the whole bucket of your thematic investment should have various themed investments in there that are not overlapping. So they're not going to track your typical benchmarks. And I think that's important to understand that. And as I've said before, this makes the case that, in fact, it is sort of a separate asset class precisely because it doesn't track those traditional benchmarks. And finally, due to the long-term nature of this investment, it encourages a buy and hold approach, which is, generally speaking, a good way to invest over the long run. So from our viewpoint, thematic investing is typically a satellite position or an equity sleeve in the growth portfolio. So as it shows here, thematic investing tends to be alpha seeking, meaning it's trying to seek that extra bit of return. It has a long time horizon. It's clearly growth oriented, and it's equity based, meaning it is only positioned in the equity side of your portfolio. This approach best fits when your portfolio is either purely growth oriented or partially growth oriented. You have a long-term time horizon, and it's replacing or augmenting your growth equity exposure, but keeping generally your asset allocation the same. And I think for a lot of people, that's where it's going to fit in. We're going to have our traditional, like I showed in that earlier table, the traditional lineup of asset classes, but we're going to be inserting this thematic-based sleeve in there. So if you look at this, the bottom chart, it shows 40-60 traditional moderate growth portfolio. In that 60% equity, we're going to have 10 to 15% of thematic-based investment. The rest being the core, often index-based investments. And just to kind of put the theory to the test, so to speak, we back tested our moderate growth portfolio, our traditional index-based moderate growth portfolio, against our thematic-based moderate growth portfolio as a way of measuring if this is actually working. What this analysis shows here is that on the margin, the thematic portfolio in blue tracks closely the traditional in gray over time, but offers an additional alpha, right, or an improvement in our return over the period. On a 3-year basis, the thematic portfolio generated 2% more return with a similar risk exposure as measured by volatility. You can see here down below, I put some stats. The beta just shows correlation to the traditional portfolio, the one in gray. It's just slightly above. It's a 1 would be exactly correlated. It's very near correlation, and the fit as measured by R squared suggests that it's a pretty strong correlation. Batting average is just how often on a monthly basis, how often the thematic-based portfolio beats the traditional. So 54% of the time it was beating on a monthly basis, is beating the return. The Sharpe ratio, as I may have mentioned earlier, this helps us understand what a risk-adjusted return is. So the Sharpe ratio, which is a unit of return divided by unit of risk or volatility, you can see that we've improved it. We've improved our ratio to the traditional 0.84 versus 0.75. So we've added on the margin, even though these portfolios are very similar, we've added on the margin a little bit more return relative to the risk. Standard deviation being the classic definition of risk. It's slightly more, the standard deviation is slightly higher, but overall, we're rewarded for that by a significantly higher return. And that shows up in that Sharpe ratio. And you can see just on the bottom, the total return over the same period, our thematic-based portfolio, we call our innovation series, is definitely beat it. So this is one of the reasons why we have rolled out this innovation series of portfolios, is precisely to capture this margin of alpha and help improve the performance over the long term. Okay. So what are the key takeaways? Well, first, that innovation is an opportunity to invest in changes occurring in the economy. That's really important. That's what we're talking about here. We're investing in changes in the economy. Secondly, the core asset allocation that most of our clients have can be improved by the tilting of that growth part of the portfolio towards these accessible, investable growth themes through these ETFs that we've identified. And finally, that by introducing this thematic growth sleeve to that traditional asset allocation model, we can add some alpha to the risk return characteristics, that we can add a little bit more return over time and help improve the performance of our clients' portfolios. So those are the three key takeaways. Now I'd like to turn it over to questions. You can put in the chat function any questions that you have. Are there any questions? It's a great time. I actually finished sooner than I thought I would. So we have a little, few more minutes to answer questions. So there are no silly questions. There's no, there's nothing that you could ask that somebody else is probably not already wondering about. I'll give it a moment, give you guys a chance to think. In the meantime, I would like to say that we have already started rolling this out with some clients. As we meet, we talk about this opportunity. It's not required. It's not a required shift in portfolio. The traditional portfolios certainly have performed very well. But this new introduction of the thematic asset class, I think, is going to be a really good improvement especially in our asset allocation series portfolios over time. So there's one question: how are well-run thematic ETFs to be identified? Through past performance? That's a very good question. Well-run, I think, means a lot of different things. I mean, it obviously, past performance could tell you, hey, this has been great, but past performance is one indicator, but it's also, I think, the relative fit to the thematic investment. So what I mean by that is, when you've identified a theme, say, let's call it electric vehicles. We'll take that one for example. there are a number of global companies around the world that you can invest in. NIO, Tesla being the obvious one, but there's a number of them that you can invest. Even GM. GM's the second largest electric vehicle manufacturer in the U.S. So when you look at the theme of electric vehicles, there's a subset of investable companies, and that subset becomes an index, if you will. And what the theme is trying to do is access that index of accessible investments. By the way, in electric vehicles, it's not just car makers, but it's also the parts makers. There's a lot of different companies in there. So when they say well run, it means how well is that particular ETF fitting within that theme. So I think fit is also an important aspect that of being well run. And liquidity, things like liquidity, is there enough liquidity in these? And another aspect of well run is also volatility. Now we can't always control volatility, but illiquid, highly volatile investments within a theme could be a problem. So, eliminating those from the list is also, I think, an important aspect of the thematic ETF construction. Hopefully that answered your question. Are you actively researching new disruptive technology outside what you have listed or subsets of these technologies? I'd be curious to know what are on the fringes of the next disruptors. So that's a good question. So we work with a number of we have relationships with a number of different research teams or partners. Some of these produce their own ETFs like Global X, some don't. I think when you look at this idea of thematic investing as sort of a non-correlated asset class to your traditional sector approaches, what you're going to find over time is that the research will be constant. So we will be constantly working with our partners, identifying new areas to invest in. And since, that adoption curve, that S curve is clearly, it's over time, right? So over time, some themes will mature and no longer generate the growth potential that we're seeking, and new ones will appear. New ones that we haven't yet identified or maybe haven't emerged yet. So I think it's different from like smart beta or looking for factors that some investors look for. Like it's not related relative to some kind of investing strategy that's generating or arbitraging value. It really is, it's more macroeconomic. It's more top-down macroeconomic. And these things, they need a long time to mature, and sometimes they take time to emerge. And so yes, to answer the question, we are going to be looking outside of those listed. Obviously, some early themes that are emerging in the economy won't have enough investable companies right away, though maybe the SPAC, what they call the special purpose acquisition companies that are pretty popular right now, they might accelerate access to some of these themes, but really it's going to be determined by the accessibility and investability of it. So as those two factors, investability, accessibility, become clear, then they're going to merge as a new theme. And yes, I believe this will be evolving constantly, and we personally will be looking at those themes. And yes, we will be changing up that part of the portfolio as themes mature and we cycle them out and we look at new ones. So that's part of our asset allocation strategy that we will do for our clients. Hopefully that answers the question. Any other questions? Again, no silly questions. I think it's important to get your doubts satisfied. Of course, feel free to always, most of you on this call have our contact details, so feel free to reach out to us. But I think the case strong. And I think that if we go back to this particular chart, our back testing against, and these are two portfolios we've run. It clearly indicates that adding this thematic asset class is a really smart way to add some alpha to the portfolio. And as you saw earlier, there's only 163 of them in the investable universe. So there's probably 10 or 15,000 mutual funds out there. There's only 100. So it's a new approach to investing, but I think it's served well so far, and it's definitely, I think, going to be a great improvement to the asset allocation characteristics of our clients' portfolios. We have a couple other questions. Go back up. Would you be able to keep us updated on these emerging technologies? Yes, we will be updating with usually through our traditional communications channels like posts and emails to our clients. We will be updating regularly on thematic investing going forward, particularly as we roll this out. And this is somewhat new. We already have clients that are invested in this, but as an asset allocation approach, it's somewhat new for us. So we will be updating you for sure. What is the outlook on biotech technology after the 2020 pandemic? How strong is the inclusion of these companies in the ETF? Biotech is definitely part of thematic. Now, biotech itself has been around for a long time. So I think within the biotech sphere, as it relates to both thematic and both the health, the health and wellness thematic is pretty important. It could also show up, for instance, in other areas. One perhaps controversial area is like sort of genetic testing and what kind of biotechnologies emerge from that. Like think of, I'm having a baby and I'd like to know if there's issues around that. Or even more futuristic is the designer baby, right? Which they're already working on is, hey, I want, looking at my genetic pool, how can we create the best baby? That stuff is already well in the works. It's very futuristic, but it's already, from a biotech point of view, already in the works. So those are areas that I think you'll look at. I mean, that would probably, again, from a thematic point of view, is going to be health and wellness, or potentially, in generational behavior. Millennials right now could very well show up in that because they're the generation that's now having babies, right? Forming families and things like that. So I think that the inclusion is going to be there, but just not in your traditional, we're investing in biotech, because that's been around for a long time. As far as like the traditional growth portfolio always would have biotech or traditional, or some kind of technology exposure. So I think it will be in there for sure, as not only as a general theme, but also showing up in other themes. Are there any other questions? These are all really good questions. And by the way, we would love to talk with you individually about these at any time. We will periodically send out emails that have a scheduling link to it, where you can schedule a time to speak with us about any of these topics or about your portfolio. And you can, it basically plugs in a meeting on our calendars. So, and you have a choice to talk with Glenn or myself or whoever is available, but whatever is convenient for your time. So you have already gotten one of those links for sure. We've sent them out on a couple of occasions, but and if you want us to resend you that link to try to fit something into your schedule, we're happy to do so. Are there any other questions? Any other questions? If not, I think we can wrap this up. I really appreciate you guys taking the time out of your busy days, and hopefully you got a chance to nibble on some lunch and learn something through this presentation. And I look forward to hearing from all of you. Take care.